Welcome to Monetary Mindscape, where we don't just talk about money, we question its meaning. Today we pull back the curtain on one of the most powerful and least understood forces shaping global finance, the hidden hands behind ratings, interest rates, and economic collapse. This isn't a conspiracy theory, it's a pattern, one that repeats across decades, across continents, and across crises. So, if you've ever wondered who really benefits when economies crash, stay tuned. Moody isn't just a credit rating agency. It is presented as a mysterious force in global finance. The video paints Moody's as a prophet, always right, yet always bringing disaster. It downgraded Lehman Brothers and Evergrande just before their collapses. But rather than sounding an alarm, the downgrade is seen as a signal to insiders, a final blow delivered with precision timing. The implication: Moody's doesn't just predict collapse, it plays a role in making it happen. Warren Buffett is more than a legendary investor here. He is cast as a behind-the-scenes power broker. The script suggests that Buffett is a major Moody's shareholder, profits handsomely from these market collapses. He offers lifelines to failing firms, but only on his terms: high interest, guaranteed returns, and stock options locked in at bargain basement prices. When they refuse, they collapse, and Buffett profits anyway, by buying others on the cheap. It's not just smart investing, it's strategic timing backed by influence. The video challenges the credibility of rating agencies. It claims that institutions like Moody's often give high ratings to toxic assets, right up until the moment of collapse. These sudden downgrades aren't just warnings, they trigger market panic. The real winners are those who had advance notice or who understand how the system works. Buy an early, exit before the fall, and let the downgrade do the dirty work. Interest rate policy is shown as fluid and reactive, not rule-bound. The Federal Reserve claims to follow inflation and employment targets, but the video argues these criteria are selectively enforced. One moment, the Fed cuts rates due to high unemployment. Another time it refuses, citing inflation. The inconsistency isn't just confusing, it benefits those with power and foresight, while leaving everyday investors in the dark. The idea that the Fed sets the tone for markets is flipped on its head. Instead, U.S. Treasury bond yields are shown leading the Fed's actions. This inversion implies that bond traders, not central bankers, are the real puppet masters. When yields rise, the Fed follows. When yields fall, the Fed follows again. The story here is about control, and who really has it in the global financial system. Banks are accused of exploiting a rigged loop. They borrow money from the Fed at low rates, then turn around and redeposit those funds for higher interest, sometimes at the same institution. It's a cycle of low-risk, high-reward profiteering that adds no value to the economy. Instead, it drains public resources while padding private profits. This isn't just clever finance, it's systemic extraction. Short-term debt is rising, and with it, a dangerous cycle. The US government must refinance more often and at higher rates. This benefits creditors but puts pressure on taxpayers. The longer the cycle continues, the more power shifts to those who hold and trade government debt. The debt ceiling debates and budget crises, they read not just political theater, they re-leverage points in a broader game of financial dominance. Countries like Japan are shown as unwilling victims of the US system, holding trillions in US assets. They lose when both bonds and the dollar fall. But if they try to exit, they crash the system and hurt themselves. This dollar trap is presented as a quiet form of global financial control. As long as the dollar remains the world's reserve currency, escape is nearly impossible, without taking huge losses. When we follow the money, we find more than numbers. We find influence, timing, and power games, disguised as market forces. Moody's, Buffett, the Fed, they're not acting randomly. They're replaying a game with rules they helped write, and most of us were never invited. But knowing the game is the first step in changing how you play it. If this sparked something in you, don't just scroll, subscribe, because here on Monetary Mindscape, we don't chase wealth, we understand it.